Welcome to the Techno Fundamental Report for November the 20th. We're doing this a day early due to scheduling conflicts. Anyway, Warren Buffett, if you mix politics and investing, you're making a big mistake. I know he's right, and the reason is that the news and these elections are so emotional, and the news, if you think about it, the news is designed to scare you. You're not going to turn on the weather station unless there's a hurricane coming or something like that. So remember here it says when the news wants to tell you something is important, they put dramatic theme music behind it. They scare you into watching the story. So the problem with the political stuff is it has nothing to do with corporate earnings, and that's what's so important. Now, the whole name of the game here is we all want to be prosperous. We want to seek prosperity. And this is based, again, on Gerald Loeb's book, Battle for Investment Survival. He says, personally, I feel that one must learn by experience the basic principles of successful dealing in securities through trading in active listed leaders. And particularly, one must acquire the ability to control personal emotions or fear of loss or greed for a larger profit, etc., which affect most people's decisions and are very costly. So you want to avoid the emotional side of things. You want to stick with the facts. Now, when it comes to investing, there's a paradox. And the paradox is the highest quality companies in the world are usually considered growth companies. These are companies that are growing their earnings, increasing their cash flow, and so they tend to be volatile because they're so successful. So the question you have to ask yourself is, am I happy going with an old ox cart and going slow like a Procter and Gamble, or do I want to get a faster horse and get to my destination? So we prefer the fast horse. Now, there is some brainwashing going on, I believe, out there, and it has to do with just traditional thinking about, buy and hold, getting a dividend, that kind of stuff. Well, many investors like to think of themselves, or think of, or at least describe themselves as long-term investors. Their strategy is to stay fully invested through thick and thin. Most institutions do the same thing. But such an inflexible approach can have tragic results, particularly for individual investors. Individuals and institutions alike may get away with standing pat through relatively mild bear markets, but many bear markets are not mild. So some such as 1973, 74, 2000, 2002, 07, 08 are downright devastating. So you have to realize that in the markets, don't get brainwashed into thinking that, you can just be a long-term investor and make one-time decisions, because I see too many examples. Like here's one here. This is Super Microcomputer. We were looking at this stock. I mean, we were looking at it here and in this area, and this thing took off and really went up. It went from the mid-20s up to over 100. So basically, you needed to have a stop loss in here. I mean, this thing has dropped from 117 all the way down to 17. So that's one example. Now here's an old timer that, is somewhat interesting. This is Merck, which is, pharmaceuticals. Now the pharmaceuticals have been getting hit since the election, but you can see here, a stop loss in this area would have made sense. Usually we say, don't let any one decision go against you by more than 1%. Financial planning, I'm of the opinion that the best financial plan is to make money and to invest in the right stocks. So to think about financial planning, what we have found worked the best for most people is to have a certified accountant that they have confidence in. A good probate lawyer wouldn't hurt, and then you need a good investment advisor to help you. So the best plan to me is to have separate parties doing separate things. This idea that somebody can just, do it all, I just don't believe it. Now, realize here the purpose of the plan, I believe, one of the purposes is to teach your children. You want to teach your children proper investing. A lot of parents don't do that. Now, this is the federal deficit. And I just wanted to point this out because it's an accumulative problem here that goes back to the 1970s, actually around the recession of 1974. We started going into debt, and then Newt Gingrich and Bill Clinton balanced the budget here around 1999. But you can see that the deficit has just really, really been a problem. We've got to get this under control because the country's going bankrupt. The main trend is up for the S&P. The main trend is up for the NASDAQ. This is very important. We are in a bull market defined by the trend. Now, on the power index, we're still in a power index. Now, you can see here over the last couple of days, we've been challenging the power index, but it's holding. Now, remember, the power index ends if the 21-day crosses below the 50. This is still a powerful uptrend. S&P, same thing. We've got, a little bit of a challenge here, but it's holding, and so far, so good. Interest rates look like they're starting to stabilize a little bit here. This is the 5-year Treasury yield, and then this is our power index. Never got above 0, got close, but it seems to be stabilizing. Looks like rates may be starting to come down a little bit. Aggression index, very powerful. We're on a buy signal on the aggression index. We've gotten the golden cross on the moving averages. So this basically says that the NASDAQ is outperforming the consumer staples, which are very defensive. Here we go here. Now, this is a very growthy fund. It's an aggressive fund called ARK Innovation. It really is somewhat of a way to measure growth stocks. But you can see here a major breakout after the election, starting to kind of consolidate. We'll just have to see. But that's Kathy Wood. She started this fund several years ago, had a big success, but did not do well in the 2022 bear market. None of us did. It was a tough period. I thought this was interesting. I did a ratio of the Vanguard Total World Stock Fund. So these are all the stocks in the world, and I compared it to the S&P 500. And you can see you need to be in the United States. There's no doubt about it. The rest of the world markets just really aren't happening. I've really invested very few times in foreign securities. I just think the United States offers the best opportunities. So if you have any questions, please let me know. Thank you very much.